BigBear.ai Holdings Inc. is currently trading at exactly 6.04 USD, seeing a significant intraday surge of plus $0.64, which translates to a massive 11.85% gain on the day. We are witnessing a fascinating dislocation in the market right now, one where the prevailing narrative of small-cap AI fatigue is colliding head-on with a sudden, violent repricing of value. If you have been tracking the order flow on your Interactive Brokers trading screen or watching the volume candles print on your Fidelity mobile app, you are seeing something that defies the lazy analysis we often hear about government contracting stocks. The expectation for BigBear.ai has long been that it is a slow-moving, contract-dependent defense subcontractor that will drift sideways until the Department of Defense decides to sign a check. That is the expectation. The reality, however, is that we are watching a company fundamentally alter its capital structure and growth trajectory in real time, effectively weaponizing its balance sheet to force a breakout that many short sellers were simply not prepared for. This 11.85% move today is not just noise, it is a structural shift in how the market is valuing their latest aggressive maneuvers, specifically the acquisition of Ask Sage and the sudden influx of international partnerships that nobody seemed to price in correctly. When you look at a stock like BigBear.ai making a move of this magnitude, you have to look past the headline percentage and interrogate the volume. What we are seeing today is not just retail enthusiasm from the Robinhood Investments crowd chasing a green candle. We are seeing what looks like institutional accumulations stepping in to defend the $6 level. This creates a curiosity loop for anyone watching the sector. Why now? The company just reported a revenue decline of roughly 20% in the third quarter of 2025, a figure that typically sends a stock plummeting into the basement. Yet, here we are, rallying hard. This contradiction, bad headline numbers versus explosive price action, is exactly where the opportunity lies. The market is a forward-looking mechanism, and it is currently sniffing out the fact that the revenue dip is likely a temporary trough before the integration of Ask Sage's generative AI revenue stream kicks in. The market is effectively saying that the old BigBear.ai revenue mix is irrelevant, and the new growth engine is worth a premium. Let's establish the common ground here. Most individual investors holding this in their Schwab Intelligent Portfolios or self-investing accounts are likely frustrated by the volatility. You have probably seen this stock spike to $7 or $8 in the past, only to bleed back down to $4 or $5. It's exhausting. The general belief is that without a massive, headline-grabbing contract from the U.S. Army that rivals a Palantir-sized deal, this stock is dead money. That is the consensus view you will find on every forum and message board. But I want to challenge that perspective. The deeper take here is that BigBear.ai is no longer playing the volume game with low-margin contracts. They are pivoting toward high-margin software value through strategic M&A. The acquisition of Ask Sage is the critical piece of the puzzle. We're talking about a generative AI platform specifically built for secure environments, places where you can't just run ChatGPT because of classified data leaks. Ask Sage is already tracking to hit $25 million in annual recurring revenue, and by bringing that in-house, BigBear.ai is layering a high-growth SaaS model on top of its lumpy defense business. That is why the stock is up 11% today. The smart money is buying the margin expansion, not the legacy revenue decline. If we zoom in on the specific price action we are seeing right now at $6.04, it is crucial to understand the psychology at play. The $6 mark has acted as a psychological barrier for months. Every time the stock approached this level in late 2024 and early 2025, sell walls appeared, likely from bag holders looking to exit at break-even. Today, we smashed through that supply with authority. When you see a breakout like this on high relative volume, it indicates a change of character in the asset. It suggests that the supply overhang has finally been absorbed and the buyers are now in control. For those of you managing your own risk on platforms like SoFi Invest or utilizing the tools on the Interactive Brokers platform, watch the VWAP, the volume-weighted average price. As long as the price holds above the intraday VWAP, the trend remains bullish. This is classic climbing the wall of worry, where the fundamental news seems mixed, but the price action is undeniably bullish. Now, we need to address the elephant in the room, the financials. I mentioned the revenue drop, but have you looked at the cash position? This is where the reality completely destroys the expectation. The expectation is that small-cap AI stocks are cash-burning furnaces that will dilute you into oblivion. The reality is that BigBear.ai exited the third quarter with a record cash balance of over $700 million. Let me repeat that. $700 million for a company with a market cap floating around $2 and $2.5 billion. Holding that much cash is a fortress. It gives them the ability to weather the storm of government budget delays, or more importantly, to go out and buy more growth. This liquidity position is what separates them from the hundreds of other AI pretenders you see listed on Robinhood Crypto or penny stock lists. They have the war chest to survive and advance. This cash pile effectively puts a floor under the stock price because at a certain point, the enterprise value becomes too cheap to ignore. Let's talk about what this company actually does, because the AI label gets thrown around too loosely, often grouped in with consumer plays like Apple stock or the massive hardware infrastructure of NVIDIA. BigBear.ai is not building chatbots for teenagers. They specialize in decision dominance. This means they take massive, messy data sets from the complex environments of the U.S. Army, the Air Force, or commercial shipping logistics, and they use AI to predict outcomes and optimize decisions. Think of it as a crystal ball for logistics in strategy. Their Conductor OS and Arcus platforms are designed to sit in the decision-making chain of command. With the Ask Sage integration, they are now bringing large language model capabilities into this secure ecosystem. Imagine a commander in the field asking a secure AI, "What happens to our supply line if the bridge at coordinate X is destroyed?" and getting an immediate, data-backed answer. That is the utility. It is boring, unsexy, back-end plumbing, but it's mission-critical. And in the world of defense contracting, mission-critical translates to sticky, long-term revenue once you get your foot in the door. We also have to discuss the international expansion, which is the sleeper catalyst for today's move. While everyone is obsessed with the Pentagon budget, BigBear.ai has been quietly signing deals abroad. They just inked a memorandum of understanding with Pahang Aerospace City in Malaysia to build an AI-driven aerospace hub. They also signed a partnership with EasyLease and Vigilix in the UAE. Why does this matter? Because diversifying away from purely U.S. federal government revenue de-risks the business. If the U.S. budget gets held up in Congress, which happens all the time, the revenue from the Middle East and Southeast Asia keeps the lights on and the growth numbers ticking up. This global footprint is something you rarely see in a company of this size, and it speaks to a management team that is aggressively hunting for revenue wherever it exists. I want to pause here and ask you a question because I really want to gauge the sentiment of the room on this one. Comment below how many shares of BigBear.ai you currently hold, and, more importantly, what is your average cost basis? Are you green at 6.04, or are you still waiting for a return to the double digits? It helps to see where the community stands to understand the potential overhead supply. Continuing with the analysis, we have to look at the competitive landscape. People always want to compare this to Palantir. And sure, Palantir is the gold standard for government data analytics, but Palantir is a massive, expensive ship to turn. BigBear.ai offers a more modular, specific solution set that can often be deployed faster for specific problems, like the biometric verification systems they have running at Nashville and Chicago O'Hare airports. This Vision AI capability is another vertical that people forget about. They are using computer vision to secure borders and speed up travel. In a world where border security is a top political priority, having a deployed working solution at major international airports is a massive validation of their tech stack. It proves the software works in the real world, not just in a lab. However, we must be realistic about the risks. We can't paint a rosy picture without acknowledging the dangers. The reality is that despite the cash, despite the acquisition, they are still posting operating losses. The net income was positive recently, yes, but that was largely driven by non-cash changes